Good evening, folks. This is Andy Pedraza with Special Effects Academy, and we are on the start of the week session for August 4th of 2019. We do ask that you maintain yourselves muted unless you have a question to minimize background noise. And as usual, we will be starting out with our standard agenda. Take a look at the results of the prior week, our currency strength meter for the past 30 days and the past week, fundamental announcements on the calendar for the week to come, a look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Starting out with our long-term account, not much change in the last week. This account has been pretty flat for the year to date, simply because that is its nature. It is meant to be long-term, so you will see some significant results when the market plays in our direction. It's usually better to look at it quarterly than monthly, but we do report on it weekly. So for now, flat. The intermediate account is at 44.71% gains for the year realized. These are on closed trades. The trades that were placed in the last week are highlighted with the red square near the bottom. And besides those trades, some of which were closed, some are still open, we did close quite a few trades from earlier weeks that gave us significant levels of profit. Of course, the main mover the past couple of weeks has been the British pound as Brexit heats up. They've got a new prime minister, and well, you're all aware of what's happening, but that has really given us an uptick. We made about, let's see, we were at 29%, so realized gains, we made about 15% in just this past week on this account. So definitely it is the star among all the accounts right now. And of course, the pound just doesn't really show any signs of stopping. As well as the pound, we had some significant movement out of the Japanese yen last week, which was sort of a bonus as we did catch most of that movement. Indeed, we're still catching it. We've got one trade still open with the AUDJPY and also with the pound JPY. So if the movement continues, we will be continuing to ride along with it. And last but not least, our short-term ledger, it had a drawdown this past week of a little bit over 7%. This account has been a little bit underperforming lately. And again, it is the nature of short-term trading that it is vulnerable to volatility. The market went in both directions last week, and unfortunately, we were on the wrong side of a few of those, even though our direction was right for a longer-term position. In the short term, it really didn't help us out. I will be looking at this account in the next couple of weeks. I think I'm going to change some of the methods or systems we're using, because if the market continues with the volatility it has been showing, then we really don't want to trade it this way. So more to come on that. But anyway, all three accounts are still positive for the year, which is a good thing. But definitely the short term has been underperforming compared to the other accounts. Do feel free to ask questions at any point in the presentation. Just as I said, make sure you keep yourselves muted unless you are asking a question. So notes and opportunities for improvement. Not much to say. The short-term account, as I mentioned, it fared poorly this week on account of volatility going in both directions. That's just the nature of short-term trading. The intermediate account continues to outperform significantly, courtesy, of course, of Brexit, plus a little bonus out of Japan. Nothing significant to report right now on the long-term account, other than we are in at least one trade that is carrying in excess of 200 pips right now. And the other trades are reasonably flat, but with good hope that they will be moving in our direction. So this account is going to be a lot more, I guess, flat for longer periods, and then we're going to have some significant bounces when we do close those long-running trades at profit. So be patient with that one. It is meant to be long-term, as its name indicates. And remember, we cannot predict the future. We can only take advantage of the present. So we're not trying to guess that the pound is going to drop this week or anything like that. we're going to be waiting for the movements to actually happen, and then we're going to get into those trades and ride them as far as we can. We never try to capture 100% of the movement. We're trying to capture the middle of the movement. We can't get in at the low. We can't get out of the high. We're just going to take a chunk in the middle, and that's going to be our profit. Let's take a look at the relative strength meter for the past 30 days and the past week. In the past month, volatility has been very high. We're in excess of 11% right now on the entire month. Silver, of course, continues to be the main performer out of everything there. It's just, well, you can see the dark blue color on the XAG line, and closely followed by gold, which has also had a great month. For the month itself, we can see that the Aussie has fared rather poorly. The pound, of course, has been the worst hit. Canadian is sort of middle road. The Swiss has been more good than bad. It's only lost ground against the metals and against the yen. The euro, middle of the pack. The Kiwi has lost ground, as well as the Aussie, as mentioned earlier. In fact, the Kiwi has only beat the Aussie and the pound for the month. The dollar has had a pretty decent month. There's no reason for it actually to have had a good month, given the dovish comments out of the Fed, as well as the drop in the interest rate. Nonetheless, the market has been very kind to the dollar. And of course, the metals at the end we already covered. For the week that just ended, clear loser, of course, the pound. Aussie closely following it, as well as the Kiwi. The winner overall, of course, the yen, which had a very sharp movement the latter half of last week. Not too clear on why exactly the yen got stronger, other than it is a safe haven currency. So with everything happening in Europe, it is normal to expect money to move over to the safe haven currencies, the yen and the Swiss franc, which we can see both of them had a pretty good week. That being said, there is no clear reason for it to have happened. So I am a little bit skeptical in that it will continue. But of course, in our open trades, we are protecting profit via our stop losses. And it doesn't matter whether I'm skeptical or hopeful or whatever it is, we trade what the market does, not what we think it's going to do. The dollar, as I mentioned, had a pretty good week for no good reason at all. The comments out of the Fed were particularly dovish. In fact, the expectations of some sort of pullback or recession are pretty much in the cards, and that's why the Fed lowered the interest rate. Nonetheless, even after all that, the dollar actually got stronger. So that was a little bit unexpected, but it is what it is. That's what the market did, and all we can do is ride along with it. CAD, middle of the pack, and we'll see a little bit more of an analysis when we get to the setups in a later slide. But the CAD is not giving up too much ground, even though it did lose against the yen and against the Swiss. It didn't lose that much against anything else. USD and Euro did outperform the CAD, but not by much, hence the light color on those squares. And the CAD indeed did gain significantly against the pound, the Aussie, the Kiwi, and even against silver. Silver did not have as good a week as it has had a month, but gold did outperform for the week again. So the metals are gaining ground, and this is mostly based on the uncertainty that's come into the market with all the Brexit stuff and trade wars with China and everything else that's going on. Nervousness makes people move their money into safe havens, which are going to be the metals, silver and gold, and to some degree the Japanese yen, which is Europe's favorite safe haven currency, and the Swiss franc, which is the United States' favorite safe haven currency. So that's where we're at. Volatility pretty high for the week that just ended at 3.67%. We did indeed take full advantage of that, especially in the intermediate term account. And of course, we'll be waiting to see what the new week brings us. Fundamental announcements coming up for the week. Pretty heavy calendar. We've got interest rate decisions coming out of Australia. That is going to be happening on tomorrow night. So it is really Monday night. It says Tuesday. It's half an hour after midnight, so my time. So yes, technically Tuesday, but it will be tomorrow night. We are going to be trading this one live. So I will be opening up the trading room at around midnight my time to trade the interest rate decision out of the Reserve Bank of Australia. We're also going to have an interest rate decision on Tuesday afternoon, 5 p.m. out of the Reserve Bank of New Zealand, also to be traded live. Then we have a monetary policy statement also out of the Reserve Bank of Australia on Thursday, 8:30 p.m. That will dovetail with our regular evening session, so we won't have a special one for that. We'll just piggyback off of the evening session. Then last but not least, on Friday, we have the job reports out of Canada, which will be happening at 8:30 in the morning U.S. Eastern Time, and that will be our final live trading session for fundamentals. So like I said, a pretty heavy calendar. We've got 4 separate fundamental announcements that we will be trading live on top of our regular 2 sessions a day that we otherwise have. And with that, we're going to move into the charts. Commodities, oil has retreated all the way back to the outer trend line yet again. So this is the 3rd test of that trend line. It is looking particularly bearish now. So that nice little uptick in oil that lasted through April seems to have come to an end. It is testing the lower levels of support and in general going sideways. The only reason we track oil is because the Canadian is closely linked to oil prices. So any movement in oil has the potential to move the CAD. But that being said, they've been particularly disconnected for most of this year. Even when oil is rising, the Canadian doesn't seem to benefit. And when oil is dropping, the Canadian doesn't seem to suffer. That at some point will change. But for now, there is a little bit of a disconnect between oil and the Canadian dollar, which is uncommon, but it does happen now and then. And we now move into the currency charts. We're looking at the euro dollar on the daily, still looking particularly bearish. And as I said, there is no good reason for the dollar to have strengthened as it did last week, yet it did. And of course, we trade in whatever direction the market is going. For now, this chart continues to be bearish, but we will not be trading it until I see it turn around again towards the bottom. We don't want to try to predict what it's going to do. We're just going to be trying to follow whatever movement it does take. But for now, a very bearish chart. It's gone back inside the previous channel that it had been following since the beginning of the year. So we're back into selling the euro dollar, I guess, as our preferred direction. The pound dollar. Nothing much to be said there other than what we all know. Brexit is causing the pound to crash. It's given us lower lows. In fact, this week was a complete disaster for the pound. It went all the way to the bottom. And of course, we picked up a truckload of pips along the way following that crash. I'm never, I guess, complacent on any of these charts. It looks bearish. It looks like it's dropping like there's no tomorrow, but that can change at the drop of a hat. So we will be waiting to see what the pound does now as the new week begins and see where we need to be trading it. It could easily go up as it will go down. So the first 24 hours of the market are going to be key to determine what direction we're going to be trading it. Of course, it could happen sooner. Definitely a bearish chart. Definitely nothing in the fundamentals that you could point at and say the pound is going to recover. So we're bearish across the board, but we're going to be waiting for a good entry. USDJPY, as I mentioned earlier in the presentation, we had a pretty significant movement out of the yen. It broke out below the prior level of support. And indeed, there's only one remaining level of support down near the 105, which is about, I'm going to say about 150 pips away from where it's currently trading. So not the biggest distance, but it is very significant that it finally broke that level of support. We made quite a bit of profit out of the yen as well as the pound last week. So I'm very eager to see how it kicks off the week to see if we continue writing it down. USD Canadian, the CAD did do a significant retrace. It's been doing a retrace for the past couple of weeks. It has hit the bottom of the Ichimoku cloud, and it's right below a significant level of resistance around the 132.30. I'm very bearish on this chart. I expect the Canadian to recover strength and indeed head for lows that we can only see if we go out to the weekly and the monthly charts. But of course, it is going to do it on its own time frame. I will be looking for opportunities to short it. I would not go long on the USDCAD unless it breaks the resistance above it and starts traveling up. Again, we're going to be trading whatever the market does, not what we think it's going to do. But for now, I am bearish on this chart, and that's the entries I will be looking for preferably. USD Swiss had a nice little recovery. Another chart that had been retracing back towards the top of the Ichimoku cloud and breaking out of resistance levels from the trend lines. It had a nice bounce down this past week. Again, the Swiss is a safe haven currency. That definitely helped it out. It is sitting at pretty much at a level of support. So we're going to be looking to see if it continues downward. This is another chart that has a lot of room towards the bottom on the weeklies and the monthlies. So I am optimistic that we're going to have some good bearish or short opportunities on this pair. But we'll have to see again what the new week brings us. If it does drop below that trend line, that's right below current price, I am going to start going short, all guns blazing, but not until then. Aussie dollar, and again, this is pretty much going to be the same story with all the dollar pairs. It's given us a new low. It's playing with a bottom level of support. Again, no good reason why the dollar got stronger, yet it did. And the Aussie, of course, didn't have a good week at all. So that gave this one a double whammy. We picked up quite a few pips on this one as well. But that was eclipsed by what we did with the pound and the JPY. But still, this one gave us a nice boost. And another one that I'm eagerly watching to see what the reaction is going to be as the new week starts. Kiwi dollar, same thing. It's breaking out of the bottommost level of support. My only concern with the Kiwi dollar is that it is very near the bottom of this chart on the daily. We can find lower lows if we go out to the weekly and the monthly, but we are going to find, or I expected to find, pretty strong support right near the bottom, and there's not a whole lot of pips there to be had, less than 100 pips at this point. So while I would like to short it, I think there's not a big opportunity until it does break the bottommost level of support. So we'll have to see. Aussie Canadian, we're also trading this one down and quite nicely, to be honest. This is one of the few pairs where the CAD actually outperformed. The other one, of course, is going to be the pound Canadian, which we're also trading. This one broke out through prior levels of support, and indeed is giving us a low. The lowest low we have on this chart is where it is currently. To find lower lows, again, we have to zoom out to the weekly or the monthly, and there are some very good targets there. So we'll continue cautiously shorting the Aussie CAD and see what we can pick up. But I am going to be ready to get out at the first sign of a retracement. Euro Swiss, yet another one that has broken out from the bottom, and yet another one that we're trading. We have open trades on the Euro Swiss, and they are at profit. So it's looking very good. We'll have to see, of course, how long this movement lasts. But with Swiss strength coming back into the market, thanks to it being a safe haven currency, and thanks to all the problems that show no signs of being resolved in the UK, Europe in general, the US, China trade wars, this, that, and the other, this chart has all the potential to give us a very long-running bearish trend. Of course, we're already trading it, so no change there, but this one can probably be our big money maker for the next month or so. So we'll keep an eye on it. We'll continue trading it carefully and see what else it brings us. Euro pound, obviously heading towards the top as the pound weakens. The euro is weakening at the same time, not that you could tell from this chart. It has given us a higher high. We've traded this one from the very bottom back in early May through today, multiple trades, almost all of them at profit. And indeed, it has produced hundreds of pips for us in the past month. I am a little bit cautious with this one since it is at its highest high. And again, the euro is also weakening, though not as fast as a pound. And if it does continue going up, obviously I'm going to be trading it up, but I'm very, very, I guess, skeptical of how much potential this one still has to give us. EURJPY, another big moneymaker for us last week as the yen strengthened against everybody else. This one has broken out of all levels of support. It's giving us a low we hadn't seen since at least a couple of years back, perhaps more. I'd have to zoom out to the weekly, monthly. And we're already in this trade as well. We're carrying a nice big chunk of profit. Indeed, this is the trade that's carrying 200 plus pips right now on the long-term account for us, of which I think about 120 pips have already been protected via the trailing stop. And of course, we're not going to be changing that. We're going to let it continue to play out as far as it wants to drop. All my targets on the long-term account are 500 pips or higher, but I will be protecting profit as it drops. There's no sense in giving back profit to the market once you've already captured it. But we would be re-entering the trade if it does retrace and then turn around again. Euro Canadian, this is one of those where you cannot see any sort of CAD strength. It has been sideways for the better part of a couple of months now. And even though the CAD has been getting in general stronger and the euro has been weakening, for some reason, this one is still going sideways. So there's been no reaction. That can change at any point. And when it does change, it's probably going to give us a very, very nice opportunity, but it's going to be a very quick one as well. So what I am going to do with the EURCAD very early this week is I'm going to set a trigger to take us in short if it drops below a certain point, because when it does, we may have one of those 300 pip movements in a single day. And if you blink, you missed it. So I'll set up the entries so that we can take advantage of that if and when it happens. Pound JPY, of course, the yen got stronger, the pound got weaker, so this one just crashed to the bottom. It broke through all prior levels of support and is now in free fall. We've got open trades on the pound JPY. They are at profit, and we'll continue writing it down for as long as it wants to go. I've said this before. I'll say it one last time. I'm being very cautious with the pound trades because they could as easily retrace, obviously not to the top of the chart, but to prior levels of resistance on the slightest good news coming out of the UK or Europe. If for whatever reason the European Parliament says that they are willing to negotiate a new deal with the UK, just that statement would make this thing go up 200 or 300 pips. So you don't want to be careless with your open trades on the pound because they are very susceptible to the news cycle. So be aware of that. Be careful with it. By all means, continue trading it and making profit, but don't get sloppy with your trading on the pound. AUDJPY, nothing much to say here that we haven't said already. The yen got stronger, the Aussie's getting weaker, and this is yet another chart that has broken the bottommost level of support and is technically now in free fall. We'll have to see as the week starts, and I'm very, very closely monitoring this situation. We have to see if the yen, is going to continue getting stronger as the week begins. AUDJPY is one of those pairs where we have an open trade. Some of that profit is already protected, but I would, of course, I don't want to take profit off the table if it's going to continue dropping. So I'm going to be following that situation very closely and adjusting as needed. For now, we're short on all these XXX JPY pairs. Euro New Zealand is obviously not having, the Kiwis obviously not having a good couple of weeks. So it has retraced all the way back up to the outer trend line and all the way to the Ichimoku cloud. We had been trading it down since the top. We took profit out near the bottom as it started retracing. We've not been trading it because I still expect it to go down, But at this point, it's looking doubtful. I don't know what's happening to the Kiwi dollar, but it is not looking good. That said, it's not that far from the top, so very likely it's going to give us another short opportunity, but we're going to have to wait for it to actually happen. There's no sense in getting in early on one of these trades. So when it does retrace, we'll cautiously go back in short, but not until then. Pound Canadian, obviously this one is dropping. It's absolutely bearish. Part of it is the pound weakness, and part of it is the small bit of Canadian strength that is still showing up in the market. Either way, this one has given us a lower low. It's broken out of all levels of support and technically in free fall. We have a long-term trade open on the pound CAD, because I think with what the CAD has been lagging when it comes to showing strength in the charts, and again for no good reason at all. And we know the pound is likely going to get weaker, so this one is a chart that has a very high potential of dropping another 500 to 1,000 pips without too much trouble. So thinking that it might go all the way down to 150 is not out of the question. It's not crazy. It could very well happen in the next month or so. So we're already in that long-term trade, and as I said, carrying a very small amount of profit. Pound Swiss, yet another one that is being assisted by the pound weakness as well as the Swiss strength, as its status as a safe haven currency continues to perform. So we can see that it's dropping nicely. It then went flat for a while, and then last week it gave us another quantum leap down, and it is giving us a lower low than anything on the daily chart. Again, if we want to see lower lows, we are going to have to zoom out to the weekly or the monthly. We're already short on the pound Swiss. We're carrying, I forget how much, 200 plus pips on that open trade, and there's no reason to close it out so long as it continues dropping. That is the last of my charts. Some of the setups we see in progress, obviously the pound pairs, it looks like the pound has lost all support. There's nothing below the pound right now on a daily. You'd have to zoom out quite a lot to see lower lows. So it is in an absolute sellout. Trade it, but as I said before, trade it carefully. Do not get complacent with the pound pairs. The Swiss pairs, they're gaining strength again, as is to be expected, given the issues in the UK and the EU, and to some degree in the US. So its status as a safe haven currency is coming to the foreground, and it is gaining strength. So we'll continue trading it down into Swiss strength as far as we can. Canadian pairs, not the best week for the CAD, really not the best month, but it is still hanging on and not giving up much ground. The only one where we've seen a significant retrace in the CAD is against the US dollar. All the other CAD pairs either are going well for the CAD, it's gaining ground, or at the very least they're flat. And I'm still expecting a more significant move out of the CAD before all is said and done. So I'm going to keep it on my dashboard, on my radar, and look for good entries. As I said, with the EURCAD in particular, I'm going to be adding a pending order to go short if it drops below a certain point. Haven't decided what that point is, but of course, you guys will know as soon as I do, either in one of the live trading sessions or via an email summary once I place that trade. USD pairs, the USD is stressed. It gained strength last week for no good reason. There was a very dovish Fed statement plus the interest rate cut in a year where it had been expected that the Fed was actually going to raise interest rates. So they've not only done a backpedaling on that, but they've gone in the opposite direction and started cutting rates. Yet the dollar strengthened. At some point, the piper is going to need to be paid on this pair. And I am expecting dollar weakness to come into the market sometime. When? No idea, but just be ready for that if and when it happens. And last but not least, the Japanese pairs, the yen pairs, they made a strong movement last week, and we did catch most of it, so very well done. But we have to be on the lookout to see if any of this is going to be continuing. I'm not too sure what made the pound get stronger. The yen get stronger, and we'll continue to try and trade it down. But until I see a reason that convinces me, I'm going to be very cautious. And last but not least, a few words in closing. There's always fear of missing out, or FOMO, as everybody seems to call it on the internet. And fear of missing out is a big thing in trading. If you missed last week and the almost 25% gains it brought with it along the way, we can understand how you'd feel left out. But movements like that, well, they don't happen every week. That's a given. But don't let that make you change anything of what you're doing. Even though they don't happen every week, they will happen again. Just be patient, and eventually you'll have another week like last week or the week before. You got to follow your trading plan. You don't change your rules no matter what. Whether you're winning or losing, that's not a reason to change your rules. Stay the course. That's how we consistently make profit. We're not going to make profit every day or every week or every month, but over time, we will be making more and more profit. Don't change what you're doing because you had a bad day or because you had a great day. Neither one of them are reasons to change. By having a system and not by chasing the market is how you're going to make money. And if you didn't miss it because you were here trading with us, well, congratulations. Pat yourself on the back. We love to hear that as well. But if you did, remember, good times will come again. And that is the end of my presentation for today. Do we have any comments or questions from anyone? Okay, then thank you very much. And we will be back tomorrow on our regular schedule. I'll be sending a recording out of this session in a while, as well as a summary and anything that's changed in the account since Friday's update. Thanks a lot, guys, and talk to you soon.